Welcome back, crew, for Sunday. We got a lot to cover in this short little Sunday video. We got Bitcoin that's sitting pretty above 108,000, but the next move that's incoming could blindside most traders. Ethereum just pushed back up above 2,450, while smart money is loading the dips. Well, and altcoins. Well, we got altcoins that some are sleeping, some are showing some signs of life. We got ETF flows that are steady. We got on-chain metrics that are bullish, but retail is still asleep. So welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in crypto and Bitcoin action. If you like what you see, give us a like. Make sure you hit subscribe, or if you haven't already, and make sure you come on over to X and follow us on X, where we talk Bitcoin, altcoins all day, every day. All right, so let's get into it. Right now, Bitcoin is holding steady above 108,000 after sweeping liquidity earlier this week. Now we're coiling for the next move. Now volume is tapering, but ETF inflows are not. The bears wanted a breakdown. They wanted to push us down through 106,200. They haven't been able to do it so far. I'm not saying they're not going to be able to do it. However, it's getting a little bit, it's getting further and further dim for them to be able to do it. So what we got, the bulls have working for them right now is an inverted head and shoulders pattern. Now, while Crypto X panics, formerly Twitter X, or sits in disbelief, Bitcoin is preparing a textbook inverted head and shoulders. Classic reversal, classic trap for the impatient. Now, I want to get onto that infamous 2-hour chart that I like to work with for you guys real briefly. Right now, what we're seeing, Bitcoin is right here. It's just above the 108. Let me get rid of my little circle here so we can do some work. Okay, so the bears are going to defend certain points, and the big guns, I'm going to show you where the big guns are. The bears are going to defend 109.5, a little bit higher than this peak. All right, there's going to be a line of defense for the bears there. They're actually looking to, trying to push down from that point. However, where the big guns lie for the bears are right up over here, this level right here. This is where they got everything. They got the stealth bombers with the 30,000-pound bombs. They got, the infantry. They got the howitzers. They got everything in that area right here. They're looking to heavily defend this area because they know if we break up through the 112, they're going to be toasted. So there's the two lines of defense that we have to look for. We have right over here, say 109, 500, and then of course right up in here, 110, 700, 111,000. There's going to be a lot of fireworks up there. So we're prepared for either side of it. Now let me get into basically. Let me show you where I was using the Fibonacci channel, right? We've been using the Fibonacci channel for a couple of sessions, so I want to stick with the Fibonacci channel to show you how the Fibonacci channel developed and what it's looking like right now. So let me get rid of this guy. Let's just pull him up out of the top over here. I can get rid of the guy, and then I'll pull this guy up over the top. As you can see, I'm really great with working with this chart stuff. So here's the Fibonacci channel. All right, so remember, we had this low right here. We had a deeper low right there where the bears were actually trying to drive the marketplace into that CME market gap, 97,500. Right now, as it stands, that level has held. Okay, so now we're kind of gravitating away from it. We're not fully out of the woods yet. All right, it's only until we break the all-time high that we're going to be fully out of the woods. So I'm interested in this high right here. Come on, man, get over there. Let's go right there. I'm interested in that high. So as we can see, we're starting to slowly break out of this channel. All right, now this level right now is not really such a strong support point, okay? It's not. It will only become a strong support point once we get through this top. Then that level will become a very strong support point. So as we can see, really right now, we got a lot of wood to chop up in this area. But as you can see, the the Fibonacci channel is starting to broaden out and come up to, guess what, that 115 that we were talking about, all saying it's going to rally, break 112, go to 115. So that's basically what we're looking at. So I'm going to show you right now. Justin's got a trade in. He's looking for actually to scoop Bitcoin on a discount, and we'll have to see if he can get it. Right now, here he is. He's looking to buy Bitcoin. I'll take you over to FOREX, where you could actually see his open orders to buy Bitcoin at 104,763. He believes that we're going to get one final drive down. I hope he gets executed. I don't know. I think he's going to have a contingency plan. You got to check out the next live stream on Wednesday. He's doing a great job with that. But right now, as it stands, he's looking, for another pushback down so he can scoop the coin at a really low discounted price. However, we got to look at the longer term structure where we're talking about Wyckoff. Now, remember, this is longer term. All right. Bitcoin's Wyckoff structure is textbook. Breakouts, consolidation again, then vertical moves. If you studied history, you're not going to be surprised. You got to be positioned for it. We are looking to ride the wave. We're looking to exit before the trap is set. Now, as I said in another video, we're not trying to predict price. We're just trying to ride the bucking bronco. But right now, the Wyckoff structure is still in play. It's still looking good. So, of course, we're going to have a lot of to and fro, and, Justin may get executed on that lower side where you can scoop Bitcoin lower. So if I want to move on to good old Ethereum, let's look at Ethereum. All right, we showed you this chart the other day. Ethereum just confirmed the retest, okay? It was a perfect bounce off the breakout zone. The next leg up for Ethereum is loading. Now, if I come on over, I want to show you Justin's idea here. As Ethereum has just reclaimed 2,450, he's thinking that we're going to get a final dip down, and I'll show you exactly where he wants to scoop Ethereum right on our broker, right here at 2,315. Now, the issue that we have right now is is that Ethereum is reclaiming its 50-day smooth moving average. Now, institutional demand is creeping higher. Ethereum ETFs are attracting steady flows. So technical structure faves an upside if we stay above 2,400. However, we could get that final dip down before the takeoff. If we do and we scoop the coin, upside targets are 2,680 and then 3,000 if momentum kicks in. So if we come on over to good old Ethereum here, we can see that Ethereum is actually mirroring the 2016, 2017 market structure. Okay, back then we did 10x on this. Okay, now we're looking at bigger capital, a bigger runway. So you don't want to fade the king of all altcoins. Now I want to show you the Bitcoin or Ethereum Bitcoin ratio. Okay, right here as the chart loads, every time we come down into this reversal zone, it reverses hard. You don't need 10 indicators. You don't need anything else but to look at this. This is a textbook reversal zone. One of those spots you just don't fade. Okay, so now let's go move on over to altcoins. This is where it gets spicy for us. Now, we're saying that post-halving rallies always start slow, then explode. Now, a guy I like to follow, Jamie Coots, has predicted a final rally for altcoins in the cycle, and his thesis is the same as ours. Post-halving rallies always start slow, then explode. So the recent dip erased bullish momentum, but every time price has entered the zone, okay, it is reversed vertically. So be early or be exit liquidity. Now, Coots, who I like, emphasizes metrics like network activity and real usage value. Now, this tends to often front-run altcoin recovery, even in choppy zones, okay? And I want to take you over to this chart right here. We can see altcoins are starting to coil again, but the broadening wedge is holding strong. First breakout, textbook bullish. Current retest is still valid. Next, the setup minted millionaires last cycle. So look for altcoins with high network activity, rising value, especially in DeFi sectors. Now, Ethereum holds 55% of altcoin value. So assets like Solana, XRP, AVAX are showing strong accumulation signals. Sol is holding a support trend line. XRP is building a bullish divergence. BNB flipped 600. Altcoin season is like a trigger that's ticking higher, but make sure you keep your eyes on HBAR and AXL under the radar plays showing accumulation. Now, we're not full-blown altcoin season yet, but we're still getting close. Once Bitcoin dominance flips, expect fireworks. If we look at one of the fear and greed index, just as as we can prove that retail is asleep, it's hovering, slight. It's hesitant in greed right now. So retail is still on the sidelines, but the whales are quietly positioning. This accumulation could be before detonation. All right, crew, as we wrap up, I want to make sure that you're well aware of our trading community. Come on over, and in the description below, you will see. You click this link, you'll be taken over to this site where you can join our free community. Again, totally free. We drop insane alpha. It's also the way to get into the live trading room with Justin on every Saturday and then the one coming up on Wednesday. You want to follow us on our trusted broker, Solid Broker. Well, you come on over, you click this link, and you'll be taken over to WeX, the broker of our choice. Low fees, fast execution, everything that you could want in a broker. So lever up your trading and let's stack the stories and the profits together. And don't forget to come on over to X. Follow us on X where we talk about Bitcoin and crypto all day, every day. So what do you got to do? Well, you got to do your own research. You got to trade with your head and not over it, okay? And as a short-term trader, enjoy the party, but dance near the door. Cheers.